Hi, everyone, and welcome back to another show. My name is Tyler, and I'm here with Matt, the founder of ORATS. ORATS is an options analytics platform built on top of over 15 years of historical options data. Our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. Today on the show, we're going to be discussing how to use the ORATS Data API. Matt, do you want to share your screen and get us started?
Sure. So if you come into orats.com, you'll see our trading tools. That's the dashboard that we often show on here, and we'll be showing it later. It's a good way to show the visualizations. And then we have APIs, historical data, and some more. So historical data is more of the flat file delivery, but the APIs is what we're going to be focusing on today. And we generally break it out by end of day data and intraday data. And then we have the documentation. Anything else on the site, Tyler?
Yeah, I mean, I kind of just wanted to go over the differences between the APIs and the historical data sets and kind of why somebody would pick one or the other, file sizes, rate limits, response time, stuff like that.
Excellent. And then, for the historical data, you could purchase near end of day. That's just the strikes file. So it would be like, the option chain, and download that from an FTP site. Now, if you wanted to augment that data with constant maturity information, you would then need to go back to and also subscribe to the APIs. And then if you wanted a finer granularity, 1 minute intraday, we go back to 2020. And for 2 minute, we actually go back to 2015. So if you wanted data back to 2015, you'd get 2 minute data from 2015 to 2020 August, and then you'd get the 1 minute data going on. And we actually have now hard drive delivery of that information. So what that means is you could either get the 2 minute data, or you could get the 1 minute data, or both, and they could come to you on a hard drive. And the reason you would do that is to save there's pretty high egress fees for AWS. Anything else on that, Tyler?
Right. So these are all historical data. I like to call them flat files because you're just getting CSV files delivered straight to you. And they're more for bulk data analysis. So if you want to analyze like the entire, symbol catalog that we have, nearly 6,000 symbols, or if you just want to do a few hundred, this is probably the best route. The APIs do also have historical data, but it's more on a query by query basis, right?
Right. It's all RESTful. It's very easy to do. As a matter of fact, if we go to the console, should we go to the console now, or anything
Yeah,
else
let's
on the
go for it.
website? So if you go to the console and look at like delayed data or historical data, you could go get strikes history and be able to say what the trade date is, and we give you the entire kind of curl message or URL here. So it's very nice way to see, test, and access the data.
Yeah, the API console is great. We have very robust docs as well. So you can go back to the website and check out the docs. So, one thing, a lot of our customers are doing, they're feeding the API into an agent. So if you want to do that, kind of the easiest way to do it is to just give the agent a link to the documentation, and then it'll kind of peruse it and look at the endpoint URLs for you. So they're all very clearly there, the GET requests that you can do, the required parameters, and then the expected response output. So if you're just looking at this, or if you're feeding it into an agent, then this is what you do.
Right. Yeah. And agents will basically write all the code to go get this. It's pretty awesome. I mean, we're seeing great growth You want to talk about the growth and what people are doing, Tyler?
Yeah, I mean, we're seeing probably the highest amount of growth in the live APIs. So we have live data APIs that have less than 10 seconds of market delay, which is good enough for a lot of retail use cases. And that's where we're seeing a lot of the growth. Also in the intraday API. So we have the 1 minute history that Matt was talking about earlier with the flat files. You can also query in the 1 minute data API, and that's
Yeah,
usually better for a lot of use cases because storing all that 1 minute data can cost thousands of dollars. If you're adding up the storage costs of S3 or the egress fees, it can get really expensive. So storing that data in bulk is really expensive. So in the API, you can query it sort of on an ad hoc basis, or if you just need the full 1 minute history for SPX, for example, you can just write a script that downloads all that data for you since 2020.
yeah, and I think it's incredible. I mean, I remember when we made it, like I couldn't believe that you could go back. Like this is an individual minute, so this is from 2022, August 8th at 10 a.m. and you just hit download and it's already there. Like it's so fast. And then, this is what you get. This is the strikes file. And back at that minute, you could see where everything was: open interest, bid ask size, volume, our theoretical value that we'll talk about later, the SMB vol that we calculate very good Greeks on, and also forecasts of value for each option. So just incredible data that you could get in the blink of an eye, Tyler.
Yeah, it's really awesome. Why don't you talk about the fields that you're seeing there and kind of go over what's special about the fields that you get from the API. So you said that the historical data flat files were just the strikes. So what do you get in the API that's supplemental, that kind of makes the API stand out?
Yeah, so I mean, this is the strikes file that we get, and and this is in the API and in the historical. The big thing is this value. So, if you go to our options chain, you could see that this orange line is a way that we draw the skew, or what we call the fair value line, through all of the implied volatility. So sometimes there will be mismatches, and supply and demand or what have you happens, and you'll get or wide markets. We're in NVIDIA, so the markets aren't very wide, but you can imagine a wide market where the market might be 5 cents at a dollar, and you have no idea what the value is. Well, this skew would forecast that for you and give you what we what we call our SMV, or our value, and so we present that. Now, you might notice a lot of this information up here, which is very helpful. That's more derived information. So what that is, that comes from what we call our monies file. So the way I think of it, the strikes file is every option, the monies file is every expiration, and the summaries file is a summary, just one row per stock. And so you could see things like, and that's kind of like down here. So you could see what the volatility is for each month. And that's a lot better than a lot of brokers do. I don't even know how they do it. They don't do it very well. The way that we do it is we draw the skew, and then we are able to draw a 50 delta at the money volatility, that's very accurate. Some people just use averages around that, but like we use the entire skew to get an average around the 50 delta, and then so that's why we have such good volatilities, per expiration. And then let me try to stop this. I have a scheduled task here, but per expiration. So what we can do is we can then, go get that information. We could go get some of the supplemental, as you say, information that's not in the strikes file, but that is in the API. So, for example, we'll go back to the API and we'll look at the console and look at, again, we could look at historical intraday data. That gives you strike by strike, derived data, delayed intraday. So then you could go back and get like a monies file again from, a different trade date. So then I could download that information, and this is that monies file, right? So this is, again, the monies file is per one row per expiration. So here are all the expirations for Apple. It's the 8th, or this was back in 2022. We did it historically. And so what you could see is, there's some data here called, yield rate. That's the dividend risk-free rate, where the stock price is, all the expirations. Of course, that's the important one that that differentiate all these rows. And then we have this residual yield. That's important because if there's a hard to borrow, or if there's a dividend that's off in the market or something, you would see it here. The residual yield is very small for Apple because we kind of match up these calls and puts. So that's small, and then we actually do a slope of the residual yield in case the lower strikes are different than the higher strikes. And then we do something interesting here. We do a confidence number. Usually you'll have a very high confidence, around 100 and that ranges from 0 to 100 for each expiration. So, but you could see, like, some of these months were lower, and that just means that they have, they could have like wider markets or fewer options. So that's how we get the confidence. And then how wide the market is in terms of volatility, it's very tight. I could, very, very tight in vol points. And then this is really the big thing about the implied monies is where is that line, that orange line that we talked about? Where does that go through at the 100 delta, at the 95 delta, at the 90 delta, and here's the 50 delta. So this is what we call the at the money volatilities, and we do a lot with this. So this is where we make our constant maturities, and we'll be looking at that next. So this is the monies file. If you want to calculate like the 75, 25, or do something like that for each month, you could do that. But this is important for that, Tyler.
Yeah, this is what I really like about the API is it gives you a lot more than just the strikes. Like, it really augments what you get, and this is pretty unique to ORATS as well. So our API is not just limited to the Greeks and IVs. It's we're calculating all these indicators that are very good for machine learning or other cases where an AI would ingest your data values. So that's kind of what I like to use it for, and what a lot of our clients are using it for.
Right, and we do that slope that measures how steep the skew is, how curvy is the derivative, and then we do this. What I really like is this earnings effect. So like the next earnings in Apple is in this expiration, and so you could see right here it goes from 26 to 28, and like we say, well, 0.15 or 0.015 of that is attributable to earnings, and when you take that out, you have a unadjusted vol, or kind of a smooth vol. It's really cool to see. I think the best way to see that, I mean, of course, that was historically, but I think the best way to see that is in the outlook. And so you could see how we take out the earnings effect in the outlook. So the outlook will show months, like what the graph looks like. So here for NVIDIA, so here's the term structure. So it's all over the place. But if you do look at the smoothing, then it looks like kind of a typical volatility structure, where the low strikes, or the front months are below the back months. NVIDIA's next earnings is in May. So, if we didn't take that out, we kind of have vols that look off that contango skew, and so it gets it gets adjusted for, and then we could say what a good volatility looks like. So you can see the contango over here. It's coming back. Interestingly, contango is negatively correlated to the market. So a lot of our indicators are, like, as you say, very good for machine learning, because they could make a lot of these analyses and see how these are related
Right.
to the markets. I think I misspoke. This contango is positive. Like, so when you're in contango, that's good for the market. So it's positively related. So that's So that's part of the summaries. That's part of the summaries endpoint, Tyler.
Awesome. Yeah, I'd also like to talk a little bit about the derived offering. So if you're a small business or a startup, this can be a great way to kind of get the ball rolling without the OPRA or SIBO, or kind of the exchange agreements that you might have to sign depending on your use case. So our derived offering, it gets you all the indicators that Matt's been talking about, all the Greeks, IVs, and summarized indicators. It gets you everything except for the option price, bid ask, size, and volume. So those are OPRA. Those are considered OPRA data and subject to the regulations and fees from OPRA, which is the Options Pricing Regulatory Authority. So just a quick note: if you're doing a startup or you want to redistribute ORATS data for an idea that you have, we do have that option, very unique to ORATS, and it really kind of takes advantage of all the indicators that we have.
Yeah, and the thing about OPRA is, when you make your widget or whatever and you put it out there, eventually, when you make enough money, you could, get the OPRA data in there that a lot of people expect, like actual bid ask and actual volume, and but you'll have to pay the fees, and the fees can be quite high. So we give a kind of a stepping stone for people, where we use our theoretical values and our put call parity stock prices, so you don't have to pay like high exchange upfront fees right away. And then if you did want OPRA, then you'd have to like click on here and put that PDF and submit it to OPRA. So this is a good way to test and develop, like for startups, as you say, and then also as you're growing your business, it's a good way to start off, and so that's the derived fee.
Yeah, I really like the derived offering, especially for startups. And so, yeah, let's see. You want to talk about a little bit about like the request limit and the speed of the API, because we get some questions about that kind of stuff. I guess I'll just start. So the request limit is 1,000 hits per minute, which is, I mean, I think that's more than enough for pretty much every use case. If you need more than that, there's typically a better way to go about querying the API. And in terms of speed, the live data, which is we're getting a lot of signups for lately, gets you the data in less than around 10 to 15 seconds of market delay. Is there anything you'd like to add to that, Matt?
Yeah, I mean, and there are ways to get it quicker, but there's also, like, we do a lot. Like, so if you want to, we're known for our calculations in Greek, so we're doing all those calculations in 10 seconds, and so we're giving you good at-the-money volatilities, we're giving you good theoretical values, all kinds of things in that amount of time. So yeah, I mean, like it's it might sound like, I don't know, a lot to some people, but it's, there are ways that you can just get, the raw data, which I don't think is that helpful for most things, but this is doing everything and giving you, like constant maturity volatilities, all of that updates in that time limit. So that's quite a bit of information, Tyler.
Great. Yeah, and if you'd like to read more about our methodology on what happens during those 10 seconds, we have a great page on the website called the University. So we go through over 15 courses, written by us. It kind of explains top to bottom, from a very high level to a very granular level of what we do to calculate these IVs and term structures and skews and stuff like that. Kind of explains our process of smoothing the surface and giving you those indicators.
And there's also on the university is very good, but also Otto is trained on the university. So you could say,
Right.
what is slope or something? You could ask Otto if you don't understand one of the many measurements that we do, and Otto is quite good at this. So, a lot of people are using Otto quite a bit, Tyler.
Yeah, Otto's been great. It's trained on all the university content on our API docs as well, and all the other stuff in the dashboard, so you can ask it questions. We are working on making it more agentic, so to be able to do more things. So you're going to see a lot of that coming out from ORATS in the future. But yeah, it's great at fetching data, and get your API key today. You can sign up on the website. I love how fast the turnaround time is getting your API key, even for the derived offering. So you can go and sign up today, and you'll get the API key delivered to you post sign up. You can go to the API console immediately and see your usage, see your API token, see how many hits you have left and how many you've made. And then, obviously look at all the example endpoints that you can query. So it's really fast turnaround time. You can get started in, I'd say, probably less than 5 minutes.
And then, we could change token. Someone, if you expose your token, we could change it. Just email us at support@orats.com and we'll help you, navigate this. But we try to make it as easy as possible. And we have thousands of clients too. So, we've made it easy. We have made the docs understandable. AI has really helped us out a lot. So there's a lot going for these APIs, Tyler.
Yeah, and it's also really easy to upgrade. So, I'd recommend starting off with the delayed data API or the live data API. And if you need more hits, or you want to query the 1-minute endpoints, then you can easily upgrade your permissions to the $3.99 a month version in the dashboard.
Yeah, 1 million requests. That's incredible. And, we're fast. We're on AWS. We have massive cost in AWS, but what you can do up there is quite incredible. And we have a lot of alerts, so the uptime is very good and a lot of backups, so our uptime is very good as well.
Awesome. All right, Matt. Well, unless there's anything else, I think that that can wrap it up. If you want to get your API token, just head to orats.com and look at the APIs section. If you have any questions, ask our AI chatbot Otto in the top right corner of the website or the dashboard, and Otto can answer any questions about rate limits or API requests. It can also help you build your program and query the APIs yourself. So that's a great tool to use. And if you guys want to rotate your token or do anything more advanced, you guys can always email us. So, yeah, awesome. Thanks, Matt. And thank you, Trader, for hosting us. We'll see you guys again next week.
Thanks, Tyler.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.